Okay, let's take a look at these markets here this morning. So we do have news coming out here at 9 minutes, so we'll make this video relatively quick. The video to play yesterday, though, is January 30th on our website. It goes over how to trade large and small Renko sizes with the strategies. So you want to play that. That's on our website, daytradingthefutures.com. Go to recent videos, and you want to play how to trade large and small Renko sizes on January 30th. So that was yesterday. We really go in great detail on that, and you guys need to visit that to make sure you have it in your mailboxes also. But for new traders that want to go visit that, you want to replay that video to understand it. Members, you will be getting an email out. We did a market replay on the S&P yesterday for the entire month of January, 24 hours a day. We played every single trading day up to this point after the contract rollover. So replay that. Members, you'll get the exact settings that I used in that replay. I throw some of you were asking about the NQ settings to smooth it out. I included that in the email, and email's done for you members, and you'll get that right after we get done here this morning session. Gerald said he'll send it out to all you guys in the mailbox. When you're using these settings to look for the settings that you prefer on these larger Renko sizes, just make sure you use market replay. These are Renko bars. They have an artificial open, so you can't use historical data. You want to use market replay, and I showed you how to do that in the video. So look in the video. You guys will be good to go. Hey, Russell. Hey, George. And we're good to go there. So let's go over the system. When do you want to turn these strategies on? Very simple. So let's take a look at this. We had a nice afternoon yesterday. I mean, it was just a textbook afternoon. You can't get better than that. I go over this over and over and over again on a weekly basis. It's called time of day trading. The optimal time to trade this system, okay, is when there's volume in the market. Now, this works around the clock. You know, the markets are open 23 out of 24 hours a day. We shut down at 5 p.m. at night, Eastern Standard Time, to 6 p.m., and then it opens back up at 6 p.m. And even then, we had some trades last night on the had some V bottom buys. So if you're overseas, or you're in Europe or whatever, European, the session and so on, or London, the London opens at 3 a.m. in the morning. So 3 a.m. Eastern Standard Time, you tend to get some nice setups with V bottoms and V tops to use the software. And then from around 2:45 to around 5:30 London session, a.m. in the morning in the U.S., it settles down from around 5:30 in the morning to around, just around 10 to 8. And then things start picking back up around 10 to 8. But the real action starts right after the New York Open. So the rule of thumb is New York Open, 9:35 to 11 is a good rule of thumb. You're going to see a lot of setups typically on a day-to-day basis. Then the market settles down, and I have a time of day trade when they come back in. A lot of traders think the market starts heating back up at 1:30, 1:45. That's not actually the case. There's a big volume spike with these algorithms that control these markets right around 12:50. So 12:50, I tell traders start stalking the market at 12:45 after lunch, because you're probably going to get some extended moves, especially on news days. Well, the same thing happened yesterday. We had a V bottom that happened at 12:46. 5 minutes within my time of day to start looking for setups. So really start stalking trades from 12:50 yesterday all the way to close. We had 3 beautiful V-bottom setups, and the algorithm picked it up, and the software, the automated entry management system, picked it up for you. Now, these are very good entries because it's set up on our V-bottoms with the dual trend filter. And that's how you want to do it. There's 2 ways to trade the system. Number one, you can use the automated software to fire you in after a qualified V bottom and V top with our dual trend filter. In other words, if I'm green, I'm trending up on my dual trend filter. If I'm red, I'm trending down. I want to short only with my dual trend filter. If it doesn't agree, the dual trend filter, if I'm green-red, do not trade the LG2 retracement strategy. You do not want to trade that. You can trade my LG1 if you're an aggressive trader trying to get a trend change, and I'll show you how to do that here in a second. But almost 80% of your trades are going to be LG2s with trend. and that way you're not counter trend trade the market. I do show you how to trade our other strategy. We give you guys an LG1 coming out of a trend change, but that's only in chop. So it makes it very, very simple, very, very clean cut where it's black and white. Either you have a trade or you don't. Either it's trending up or it's trending down or it chops. The market's very simple. It can only do two things. Either we're going vertical or we're going sideways. Then traders need to understand that. It's not difficult to understand. Either we're trending up and we want to buy high. We want to buy high here and sell higher. Buy high here and sell higher. Buy here, high here, sell higher. Where a lot of rooms and a lot of educators, like I said, was in Vegas as a guest speaker with over 6,000 traders around the world. And all the traders, I'm telling you, that I talked to, and all the software vendors that I talked to, almost all of their software counter trend trades the market. And the traders that were in the forum when I was doing a live session out there, almost everybody counter trend trades the market. And that's why they continue to have problems in the market. You can't outsmart the market. You know, you're not smarter than the market. I'm not smarter than the market. What we can do is, these are electronically traded markets. We can follow their footprint. So whatever the footprint they're saying, if the market's going up, we're going up with it. If the market's going down, we're going down with it. If the market's sideways, we don't trade. And I think where a lot of traders all the traders that I've talked to out there around the world, and then all the traders that we had since the beginning of this trade room, was that a lot of traders lose. They do pretty good in trend, but they give all back in chop. And this is a way for us to avoid out of chop and to get in trend markets on retracements. But how do we do that? We can use, the problem with trading is this: it's very emotional. It becomes very emotional for traders. They'll see it go up and down 3 or 4 ticks. They'll take a quick profit, or they'll see it go down 4 or 5 ticks, and they'll take a loss. And they just keep doing that all day, and they end up just not having good results. Well, you got to take the emotion out. That's why we designed the LG2 strategy, Liquidity Grab Trader. Because what it does, when there's a qualified V bottom like this happened yesterday, this is a qualified V bottom, this is a V bottom, here's a V bottom over here. When you get these V bottoms that come in these markets, then you can toggle on the Liquidity Grab Trader by simple click of a button. It toggles on that quick. Replay my video on January 30th. Like I said, January 30th on our website under recent videos, and you'll see exactly what I'm talking about, a shorter term as we do market replay on this. So the great thing, not even good, the great thing about this software is the fills. The fills are fantastic. Even in fast markets, you're going to get some great fills because you're not putting in them manually. You're not buying the ask or selling the bid, or you're not buying the market or selling the market. Typically, this software will get you in 3, 4, 5, maybe 6 in the fast markets, even on the NASDAQ, even 8 ticks faster than you just normally just hitting the button. So that's an advantage to us. The second advantage, it manages the trade for you. So it's going to manage this position. So when we had these setups yesterday, it was absolutely beautiful setups. We had at 12:50, it started 1, 2, 3, 4 for 4 going into the close. You let the software simply click it on. It's going to manage your stop, and it's going to manage your targets, and it's going to manage your entry. More importantly, entry. Now, if you wanted to, what I'm doing with the upgrade of the software also is that I'm adding in when you hit, when it does fill, it's going to have automated lines that come up where your stop is, your targets that you placed in, and they can drag and trade off the same chart, which is got a cool feature for you guys. Also, I'm adding in a profit and a loss, meaning your profit goal, it will turn off that trade, or if it's a profit loss, it'll turn off that trade. Instead of ticks, it will do profit goal and profit loss. The reason I'm doing that is, what I'm finding is with this system is, typically if you get a runner that's running, you already hit your profit goal, right? And then, but you're still got a runner running. And then it starts retracing and it doesn't hit your final target. And then you give back ticks. Well, that's a good way to sort of alleviate that issue on hitting your profit goal, and it will be per trade. The other thing that I'm adding to this, as we know, if we only want to take V bottoms and V tops with overall my trend filter, then let's get trades only with the trend filter. So I got a toggle switch that you can turn on the trend filter on and off. So that's something the members have this software now where they simply click it on when a V bottom, V top comes up, it manages the position for you, so on. The bells and whistles I'm adding to it is what almost everybody inside and outside this room, a lot of traders don't trade the S&P, they trade other markets. You guys all said the same thing. You want those 3 bells and whistles to really get this thing. You know, we have a Lamborghini right now, but we want a Bugatti, right? So we got a Lamborghini software. Let's get to the Bugatti stage, and let's get this thing where you can trail. You know, if you get long, let's say the strategy gets you long, and it fires in your stop down here. I use a 16 tick stop on a 120/20. So let's say your stop is here, you'll get a horizontal line that fires off like that. Because right now it does it for you automatically, but then what you can do after you target one, you can just manually move the stop as price goes up, you know, so then you can trail price, and the targets will be above too. So let's say when it gets filled, you have your targets up here, you know, that target would be there, and target would be, let's say, here. You know, I tell traders the first target should be 4 to 12 ticks, but then after you move your stop, you can move your targets up. If you're in a running market, you can just keep moving your stops, your targets up, so on. So that's a nice little feature that we're going to have with this automated system. Getting, not only is going to, the great fills that we're getting right now, you members are getting with the system, you're going to be able to manage your position, which is pretty awesome. And like I said, I appreciate your feedback, all you guys that are doing well with the software, and that's something that we're going to do. So let's take a look at this overall. Hey, Derek. Hey, Derek, good morning. Is that, let's take a look at this overall. So when you get a V bottom, all right, notice the liquidity grabs, what I put out to you in this email, strategy buys on LG were above my inner trend dot showing major strength, all right? Spelled showing wrong. Let me show you when you can cherry pick these trades to turn the software on. News came out, so I want to get off here and look for trades. But let's take a look at this. So you have an LG1 and LG2 entry. So the LG1 entry is coming out of chop. So you're in chop when the dual trend filter doesn't agree, when it's green red, right? You're green red right here. Look at the inner dots are green, outer zone's red. Once it turns green, green, this is an LG1 entry. I have a strategy that will pop you in at the first liquidity grab right when you turn it on. So you're trying to catch this move, this first move up for an LG1. The LG2, which is my favorite strategy of both of them, is that it will look for the first, after the V bottom, will look for the first liquidity grab after the V bottom, which is this chart here. So this sets the, you can see how these trades are setting the trade up, and then liquidity grab trader, you'll turn it on and it fired in these trades on the way up. But I'm going to show you how to measure strength in the market. So what we created was I have a proprietary Renko bar that I created. So there's a bar type. NinjaTrader has the free Uni Renko bar, right? And then there's a mean Renko, there's a RJ Renko, there's all kinds of Renko bar types out there. I created my own bar type called the Sim Renko. And what that is it's these inner dots right here, these inner dots. So that's called a dual trend filter. If my outer zone is green and my inner trend dots are green, you're in a hard move up or hard move down. The trend is up. You can't short the market. You're looking
right in
for
front of him, the ship
V
is sailing
bottoms
away.
and trying to
But
get
wait,
the
is
liquidity
there
grab
still a
trader
chance he could
to
get
fire
back
the
on
trade.
board? How could that even be possible?
What happens
the entire
is
scene
you
was
know
captured
strength
by
in the
a
market if this happens.
Very
If you
simple.
see that my dots never get violated by 2 closes below it on the retracement. So here's a counter trend traders getting in, these red reversals, and then we get a zero turn candle. The zero turn candle, that's the hammer. It happens right exactly at the first candle. This is a strong possible push up the market. It called the afternoon push. It called it right to the exact bar, a 1692. That market rallied all the way up to 16. So it rallied almost, 25 points to the upside with a nice push because of zero turn candle. You would turn the liquidity grab trader on right when that candle formed. So you can sort of cherry pick your your when to turn liquidity grab trader on based upon is the market strong or weak. Let's say my dual trade filter is green, green, or red, red. Is it a strong signal? The strongest signal you can get, the best setup you get in my trade room, this is the best setup you're going to get, is this combo. This combo right here is the best trading setup you're going to get in my trading room by turning on liquidity grab trader. Look for large runners. Why? Because not only are you getting above my inner dots, it didn't close 2 candles below, it reversed, but it gave me a zero candle. Zero candle is if the hammer turns yellow, which is the doji, turns yellow, that's called a zero turn. That's a very powerful possible move. But it's above, the key is it's above my inner dots. So that's showing market strength. Market strength can push the market. Then we come up again. So you want to turn the liquidity grab trader on here, and I'll show you the entry with the liquidity grab trader. Then we come up, and the counter trend traders start pushing it back down again. They're hitting this Fibonacci. They're thinking it's a high, hitting a pivot level, yada, yada, yada. Their indicator MAC is turning down or whatever. You know, they're at a Elliott Wave 5 extension or whatever it can be. They're trying to counter trend trade the market. We don't do that. We're not trying to catch the high. We're not smarter than the market. We're looking for pullbacks of trend. So then it starts pulling back, and then I get the hammer, and I get my yellow trigger candle that comes in. Traders ask me, when do you turn on the liquidity grab trader? When do you click it on? You click it on after the first hammer comes up in the first green or yellow reversal candle. And if you get a zero turn, you got to turn on immediately because it could jet pretty hard on you, which it did for that big extended run up. But that's when you want to turn it on. This is a V bottom showing strength, though, again, because it's above my inner dots. Market moves up. We got counter trend traders coming again. They start coming in. Yellow zero turn candle. You want to turn the liquidity grab trader on again. Why? Because it's above the strength of the market is above my inner dots. So all 4 of these, right? Well, all 3 here. 1, 2, 3. They were all above my inner dots. That's showing market strength. That's those characteristics with this algo. That's your best filter you're going to get for blow-off rallies or blow-off sell-offs. So let's look at the exact chart that you would then trade liquidity grab trader. So that exact chart is this exact results on the liquidity grab trader. So when you see these, now I have a 5 tick first target. Let's go into this a little bit. So, you know, you can have this turned off. You don't have to turn this on. You can turn this off so you can get, I educate traders, leave the trend off so you can get the best fill, the first liquidity grab. So I leave this off. I put that in the PDF. But you see my stop ticks is 16. If you're using a Renko size, this is a 1/120. You don't need to use a 25, 30, 40, 50 tick stop because you're using a 20 Renko. So if you're trying to pass an evaluation account or if you have a funded account and you want a good reward to risk, you know, your first target has to be in line with your stop ticks. So a lot of like Apex is a 5-to-1 risk to reward. So you got to stay within those parameters. So you can't have more than a 25 tick stop. But that doesn't mean you got to have a 25 tick stop, you know, on a 20 Renko. It's 5 or plus or minus on these smaller Renkos I like to use. So I like the 16 tick stop on it, 5, 8, 12, 20, 30, 40, break even plus 1 after the first one. You can remember the average trade on a 120-20 is between 4 to 12 ticks on your first target. Between 4 to 12 ticks, it should be your first target. Now you don't have to have break even plus 1 on, you don't have to do that. You can change the number of contracts under order handling down here, entries per direction. You can change that to 1 if you want. If you want to go 1 and try to get, you know, 1 contract on each one of these, you can do that. 2 contracts up to 6. If you do a lot of micros, you can do 12 contracts. Enter the algorithm twice. You know, you can adjust exactly how many contracts you want to do. You want to do 9, 8, 7, 24, 60, doesn't matter. You know, just enter the algorithm more than once and it will take care of it. All right. So, but this is key, the reward to risk when you're looking at these trade setups, right? These trade setups, the reward to risk are this is actually risk to reward. I call it reward to risk. I want to have a good reward for the risk that I'm taking in the market. The risk you take with this algorithm is trying to get to target 1. Because after target 1, you're break even. So a lot of traders like to use 5 ticks between, like say 4 to 12 ticks is the average, but they like to go 4 or 5 ticks, 6 ticks to get the first target and see if the runner can hold. Like this. This is a 5 tick first target. If the market's hot, the runner held. This one had a liquidity grab right afterwards and stopped us out. This market was hot. It ended up holding on a 5 tick, break even plus 1 afterwards. So the good rule of thumb, your wheelhouse should be right around on your first target, right around 4 to 12 ticks. That's up to you. You can market replay this and see which one you like the best. But when you're turning this on manually, like I said, it will manage the entry, the stop, and the exits. But that will show you when to get in. You're buying strength here. We're buying high, selling higher. Buying high, selling higher. We're not trying to catch the runaway train. And that's where typically, there's a reason that NinjaTrader has all those indicators for free on their platform, TradeStation, Sierra Charts, Strategy Runner, all of them. They have them for free for a reason. They're designed for traders to lose because they're counter trend trading the market. Fibonacci's counter trend trade the market. If you're trying to catch the runaway train or trying to catch the falling knife, so you can't sell a Fibonacci high with divergence if the trend is up. It's just going to pull back a little bit and run right through you. So typically what I find is the traders over the year that we educated are counter trend trading the market, and that's what you don't want to do. We teach a little bit differently, where it's totally opposite of what the public is trying to do. The public's trying to buy low, sell high, buy low. They're trying to catch the falling knife, or they're trying to jump in front of a runaway train. We're totally opposite. We're going to go with order flow. We're going to let the market show what it's going to show us what it wants to do. We don't take from the market. We don't go into it every day and say, hey, I'm going to take from the market. No, you're going to get what the market gives you. If it's trending up, you're going to look for the pullback. If it's trending down, you're going to look for the pullback and sell the VTOP and get in a liquidity grab. So that's the difference in methodology than a lot of different educators in rooms and books and all that do. I've never seen one book that says buy high, sell higher, short low, buy lower, because it's against order flow. Order flow dictates what we want to do in the room. But you can turn these strategies on and off based upon strength, market strength and weakness. And if it's above my inner dots, that's when you want to turn the strategy on. The first green candle or yellow candle that forms after a pullback in an uptrend, then you want to fire in the trade. And downtrends, it's the same thing. If you're in a downtrend, the weakest part of the market, you're going to get when you're in a weak push, you're going to see the market. Let's get today's news here, actually. So if you look at today's news right now, so news just came out. Okay, so we're actually trending up. So what would you do? What would you do on the news on trying to get into the market? So right now we had a V bottom here and a V bottom here, right? So let's look at the setups today using the Liquidity Grab Trader. All right, so we had a V bottom earlier this morning, and we had another V bottom earlier this morning. Liquidity Grab Trader got 1, 2, 3, 4, 4 targets off here. Runner stopped out. 1 target here. Runner got stopped out. Notice right now we are in a V bottom. So we're at a V bottom. We got a green reversal bar, right? The Liquidity Grab Trader will not pull in until, let me get this out of the way so you can see it. They're trying to grab liquidity right now after news here this morning. So this is when you want to turn the Liquidity Grab Trader on. You want to turn it on after the V bottom. The V bottom took place. They're trying to grab liquidity right here. There's a distortion in price. If this closes above this high, it's going to get you long on the Liquidity Grab Trader. It's automatically going to get you long. Place your stop and look for the targets. Why? Because there's a distortion in price. They're pulling it back against overall trend to do a buy order block, to take the counter trend traders out, to bring it back up. Now, when do you turn the Liquidity Grab Trader off right now? Right after news, right? News just posted here at 8:30. So when do we turn it off? We turn it off if this candle closes back red, right? If it closes red, then they're not grabbing liquidity, right? Then we know for a fact they haven't grabbed liquidity. But we want to leave it on because if it closes green, they just grab liquidity. So if you look at when you look at this, we'll look at yesterday all the way into the close. Let's look when they grab liquidity. So right now, this is what the market's forming right now. It's forming a V bottom, right? V bottom. So notice the ones that's below the sub so you can see it. Look at the distortion in price right here. So this candle is actually red. These candles were red, just like it is right now, red. And then they close back green. Well, that's when the liquidity grab trader is going to get you in. And yesterday it nailed this, absolutely nailed it to the upside. I got a 10-pointer on this trade. So all automated for you, but 10-point potential. But that's how that pulls you in, right? If this closed back red, if it had a V bottom right here and closed back red, you just turn the liquidity grab trader off. That's when you turn it on and off. You turn it on after you get a V bottom. And if any one of these candles close back red, you simply click it back off and wait for the next V bottom with trend or V top with trend. Don't make it any more difficult than that. And the strongest trades are going to be when you're above. Strongest trades like a V bottom. Look at the distortion in price. There's the distortion in price, the first distortion in price. Now, if you are manually trying to do this, your field is going to be way out of whack because if it starts moving fast, you know, this strategy is going to be getting out when you're getting in if you try to do this stuff manually. Because you're probably in fast markets, like I said, 4, 5, 6, 7. NASDAQ is 8, 9, maybe 10 ticks, depending on if you buy the market, you're way off. So that's what we're going to try to do here this morning. We had 2 V bottoms, V bottom, distortion in price, got 4 targets. V bottom, distortion in price, closed back green, got long, stopped out on the rest. Now what was it trying to do? It's trying to pull in to take a trade to the upside. So we're trying to pull in. We had a distortion in price, and then we got a V bottom. So here's the V bottom that came in. Look what they just did. And this is how beautiful knowing order flow. This is a beautiful thing about it. Look what they just did in the market, the smart money. The smart money took all this order flow in. So they took it down from 26.5 down to 23. They retraced it 3.5 points. So for liquidity grab to bring it higher. So by doing that, they grab liquidity with buy order blocks somewhere down this level to try to bring it higher. So that's how liquidity grabs work. They bring it lower, right? They bring it lower to grab order blocks to bring it higher. So what they're doing, they're taking order flow in from all the counters between this level. So between this level, they're taking all these counter trend traders out of the market. All these counters out of the market. They took in all these counters out of the market by doing it. Now target one just hit. Now you got a free trade. Now we got a free trade. So now everything is free, right? The risk you take, guys, the risk you take with this software is between the entry and target one. After target one, we had a 10-pointer yesterday. Day before that, we had a 23-pointer, right? Wednesday, we had, a 28-pointer. So the risk you take is here to here. Now, if the market's hot, it'll just keep going up, right? We're not conducive to a hot market right now. But my point is, look how they're taking out the counter trend traders. Now, I have a very tight target of 5 ticks. If you don't want the runners to get stopped out a lot, increase it to 8 ticks. So you can go in or 6 ticks or 7 ticks. So if you don't want the runner to get stopped out, what you can do is you can simply increase your first target to 2 points or so. What happens is you see your runner still intact, right? But what happens if you get into more of if it doesn't get extended, you'll get these big runs, but you may get stopped out based upon if the market's slow. So my rule of thumb is I like 5 ticks, but if you want to extend it out, it's 4 to 12 ticks. It's up to you. If you use larger Renko sizes, you can adjust your size how you want to adjust. But you can see the difference. Now, if you want to do 5 ticks, and then let's say this, you do 5 ticks, and then break even is off, what will happen? What will happen is if you turn it off, what's it going to do? If you turn the break even plus 1 off, now here's what you can do with managing your position. You can turn the break even off, let the strategy get you in, and then just adjust your trail by turning the strategy off, and you can adjust your targets how you want to adjust them on the runner. So let's say you enter here and you want your resting stop below this liquidity grab, which I like. What I like to do, let's say you take break even off. You can turn the strategy off, and then you can adjust your own stops. Now on the upgrade, it's just going to show you on the screen like this. It's going to show you, it's going to fill here, and then it's going to go 16 ticks below. It's going to have a red candle, a red horizontal line, right? And then you can adjust your stop manually. So it'll take all the targets out. So what I like to do is you want to go below this. If you don't want to break even plus 1 and let it breathe more, go below the recent swing low by 2 ticks, and it should hold this swing low by 2 ticks on the last liquidity grab. I go 2 liquidity grabs back is what I do. The one is currently working on 1, and then I look at the second one, and that's my stop. Because what I found is if there's truly liquidity grab trading, they will not break 2 liquidity grabs back. And I go 2 ticks below that swing. So if you don't want to break even plus 1 like it did, it got us out at 28.25, and then it break even plus 1. If you want to try to get in big runners on every single trade and let it breathe more, let's say you're doing 1 contract or 2 contracts and you want a larger runner than 5 ticks, then go back 2 liquidity grabs, and that's where your stop placement can be, and you could literally hold this until your targets are hit. Just uncheck the break even plus 1. You'd uncheck that, let this oscillate around, and then try to get your next targets. I know a lot of traders like to do that from the charts they send me. What they'll do is they'll let it enter, and then they'll adjust their stops. They'll turn the strategy off. They'll adjust the stops accordingly right below the liquidity grabs on the way up or down. The reason that's important when you get in big runs, like yesterday we had some big runs, doing a trail like that, you can really show a price real good. So let's say you get in here and your stop is down here, right? 16 tick stop. Okay. The cool thing about using a trail like that, if you want to turn the system off and then just trail on your own, you can do that. If I go 2 liquidity grabs back, so if I go 2 liquidity grabs, here's 1, here's 2, 3, 4, so on. So if I go 2 back, you keep going 2 back, 2 ticks below the swing low. There's a swing, 80, that's 79.25. 2 ticks held you in the trade right there. Look how close it is. And so same thing here. Here is 81.5. The low is 81.25. 2 ticks held you in the swing. What I found, held you in the swing right there, I found by going 2 liquidity grabs back, if they're truly liquidity grab trading on the way up, and this is a cool feature I got with this coming out to you guys, because what I noticed on these runs, you can take break even plus 1 off. And what you can do is have a 16 tick hard stop in, and then wait for the first liquidity grab, wait till it gets 2 liquidity grabs, and then just adjust 2 liquidity grabs back. And keep doing that all the way up. So you'll go 2 liquidity grabs back. If, let's say here's a current red bar, there's 1, 2. You'll adjust it 2. That's 81.5. That's 81.25. So you'd be at 81. 81 holds you in. And then this liquidity grab forms 1, 2. Bring it up there. There's a second liquidity grab. 1, 2. You bring it back to this one. And so on. So that's a great way to trail. You can do that if you want break even plus 1 off. Right? Just like right now, if you want to do that on this liquidity grab trade here, or for new traders, I'll just let the system get you in and manage the position for you. Let it get target 1, let it get to target 2, and you're good to go. Yeah, so what you want to do is you automatically put you automatically set it in for your stop, your targets, and the entries automated, okay? So you can adjust it by dragging this. What some traders do is this, Marcus. They'll let this enter their position, and then they'll shut the strategy off, and they'll manage their position by dragging it with the software right now. right? They'll just drag it. They'll drag their stop, drag their targets, what have you, right? What I would do in the beginning, I would just let it do everything by itself. I would let it manage the position for you. I would let it manage the entry, the stop, and the exit till you get used to it, you know, and then once you get really good at looking at the V bottoms, V tops, then you can start trailing these positions and so on. What some traders will do, they use the liquidity grab trader as an entry. They'll use it as an entry, and then they'll shut it off, and then they'll trail their targets and their stops that was entered, right? So you can do that also. The upgrade I'm doing is this, though, you know, for all members. I'm going to have it pop up as soon as it enters on the same chart. It's going to pop up your stop, and it's going to pop up the targets above, and then you can leave them there and they'll get hit. Or if you see the market really running, you can adjust your target up and adjust your trail up, if that makes sense, just by a drag. Markets is real easy on the same chart. The other thing is I'm going to have it where you have your profit target and your profit loss per trade. So let's say your profit target per trade, you want $300 with a $100 loss, you know, per one contract. You know, if it hits a loss, it's going to get you out. If it hits your target, it's going to get you out. Then you wait for the next V bottom, V top. The other nice little bells and whistles, I'm going to add this chart to let us know when we're going to V bottom, right? And these are short as the so you can trade off of just one chart by simple of a mouse, you know, a click of a mouse, and you're in, and then you can manage your position all with dragging. So it's going to be like a one-stop workstation where you can let the algo get you in with fast fills, and don't let it manage your position for you. You can manage the position for yourself and drag your trailing stop and your targets. Does that make sense, Marcus? Are you on the same page with me? Right now, what traders are doing, they're letting the V bottom or V top get them in. I mean, they're waiting for a V bottom or V top to confirm. They click the software once. It's getting in. It's managed the position, the stop, the exit, and the entry. Now that traders are being successful with that and they're doing very well with the system, they want to take, like I said, a Ferrari and turn it into a Bugatti and manage their trades even more by having all these stops and targets on the same screen and have the zones right on top of when it gets filled also. So now it will only take trades, no matter what, in the direction of the trend filter with profit and loss per trade, and you get the overall targets that can be adjusted. That's a cool thing about it.